We are covering these 7 top stocks with big percentage gains today. While watching bullish price actions, let us inform you our review on CAPS. Capstone Therapeutics Corporation has undergone quite the transformation. Once focused on biotech, the company has fully pivoted into the construction materials business, now operating through its wholly owned subsidiary, Totalstone. This division specializes in distributing masonry stone products for both residential and commercial construction projects. If you're in the Midwest or Northeast, you've probably seen their brands, Instone and Northeast Masonry Distributors, supplying everything from natural and manufactured stone veneer to hardscape materials. This move into construction materials is a major shift, but it makes sense. The demand for high-quality masonry products is steady, especially with ongoing infrastructure projects and real estate developments. Whether it's new home construction, commercial buildings, or renovation projects, the need for durable, aesthetically appealing stonework remains strong. Capstone is looking to capitalize on that demand by leveraging its distribution network to serve builders, architects, and contractors in key regions. But like any business, it's not without challenges. The construction industry is highly cyclical, meaning factors like interest rates, housing market trends, and infrastructure spending all play a role in how well companies like Capstone perform. If mortgage rates stay high, for example, home construction could slow down, which would impact demand for their materials. On the flip side, if infrastructure spending picks up, particularly with government-backed projects, that could be a tailwind for the business. For investors, the key thing to watch is how well Capstone manages its distribution channels and whether it can grow its market share in a competitive industry. Supply chain efficiency, pricing power, and relationships with developers will all be crucial. If the company can scale effectively while maintaining solid margins, it could establish itself as a significant player in the masonry distribution space. It's an interesting shift from biotech to bricks, but if executed well, this could be a strong long-term move for Capstone. Definitely worth keeping an eye on. Our review on ABVE. Above Food Ingredients Incorporated is making some bold moves, and investors should pay attention. This isn't just a minor pivot. It's a full-scale shift aimed at reshaping the company's future. Above Food has been in the regenerative agriculture space, specializing in high-quality ingredients and consumer food products. Now, it's doubling down on agri-tech and fintech while shedding unprofitable parts of the business. The big news? The company has consented to the Royal Bank of Canada's application to wind up its Purely Canada Food Corporation, PCFC, subsidiaries, placing them into receivership. While that might sound negative, it's actually a strategic move to eliminate over 25 million Canadian dollars in annual net losses, cutting dead weight and sharpening its focus on high-margin specialty ingredients and tech-driven solutions. And they're not stopping there. Above Food is acquiring Palm Global Technologies, which specializes in financial tech, tokenization, and decentralized finance DeFi. This isn't just about selling better agricultural products. It's about integrating financial solutions to support farmers and food production on a global scale. If executed well, this could position Above Food at the intersection of agriculture, AI, and financial inclusion, opening up massive market opportunities. For investors, this shift is significant. Above Food is now targeting near-term profitability, and with a revenue run rate of around 200 million Canadian dollars. Adding Palm Global's high-margin business could improve the bottom line. The market seems to approve. Shares have surged over 47% on the news. But execution is key. If Above Food successfully integrates these new businesses and leverages its expertise in regenerative agriculture and finance, it could create a unique and scalable model that sets it apart. Definitely a stock to watch. Our review on KDLY. Kindly MD Incorporated is tackling the opioid crisis with a fresh, data-driven approach to pain management. Instead of just treating symptoms, they integrate traditional medicine with behavioral health and alternative therapies to help chronic pain patients reduce their reliance on opioids. Their clinics offer a wide range of services: cognitive behavioral therapy, trauma and addiction recovery, functional medicine, medically managed weight loss, and even hormone therapy. What really sets them apart is their ability to capture and analyze patient data, tracking why and how individuals seek alternatives to prescription medication. This data-driven model not only helps personalize treatments, but could also provide valuable insights into long-term pain management solutions. For investors, the company's business model is worth noting. Unlike many healthcare companies that rely on insurance reimbursements, KindlyMD operates on a fee-for-service basis, meaning direct patient payments drive revenue. This can lead to more predictable cash flow and less dependence on fluctuating insurance policies. With increasing pressure on healthcare providers to cut opioid prescriptions and find sustainable alternatives, demand for solutions like KindlyMD's is only expected to grow. The key question is whether they can scale this model effectively while maintaining the high-touch, patient-focused care that makes it successful. Expansion could bring new revenue opportunities, but also logistical challenges in maintaining quality across multiple locations. If they execute well, they could establish themselves as a leader in the growing field of holistic, data-driven healthcare. With rising regulatory scrutiny on opioids and a shifting healthcare landscape, KindlyMD is positioning itself at the forefront of an industry-wide transformation. For investors looking at innovative healthcare plays, this is definitely a company to keep an eye on. Our review on PRPH. ProPhase Labs Incorporated is making waves in the biopharma, genomics, and diagnostic space, with a clear focus on cutting-edge health solutions. The company has built a strong foundation in whole genome sequencing and is now advancing into cancer diagnostics and therapeutics. One of its most promising developments is an early detection test for esophageal cancer, which, if successful, could revolutionize cancer screening and save countless lives. On top of that, ProPhase is also working on breakthrough cancer therapeutics with novel mechanisms of action, an area with significant long-term potential. But ProPhase isn't just about diagnostics and drug development. It also has a diversified business model that includes both diagnostic services and consumer healthcare products. The diagnostic services segment, which gained traction during the COVID-19 pandemic, continues to generate revenue through a broad range of testing solutions offered to health plans, third-party payers, and government organizations. Meanwhile, the consumer product segment includes over-the-counter health products and dietary supplements, along with personal genomic services that help individuals gain insights into their health and wellness. Its CLIA-certified labs and diagnostic technology play a crucial role in both these segments, positioning the company as a key player in the growing field of personalized medicine. Now, the big question for investors is how well ProPhase can transition from its pandemic-era diagnostic success to a more innovation-driven, long-term growth model. The consumer health products side of the business provides steady revenue, but the real upside lies in the company's genomics and cancer diagnostics pipeline. If ProPhase can successfully bring its esophageal cancer detection test to market and advance its therapeutic developments, it could open up entirely new revenue streams and significantly enhance its market value. The healthcare industry is moving rapidly toward personalized medicine, early disease detection, and genomics-driven treatments, and ProPhase seems to be aligning itself well with these trends. However, execution is key. Regulatory approvals, commercialization strategies, and market adoption will all be major factors in determining how far ProPhase can go. For now, it's an intriguing player in the biotech and diagnostic space, with a mix of steady business segments and high-growth potential in its innovation pipeline. Our review on PLRZ. Polyrizon Ltd is a biotech company out of Israel specializing in innovative intranasal hydrogels. These aren't your typical nasal sprays. Polyrizon's technology forms a protective barrier inside the nasal cavity, acting like a biological mask to keep out viruses, allergens, and other unwanted particles. The company isn't just focused on development, it's actively working toward commercialization, partnering with medical experts and researchers to bring its tech to market. Now, Polyrizon just landed an intriguing new collaboration with Clear Mind Medicine, a company developing psychedelic-based treatments. The two companies signed a letter of intent, LOI, to co-develop an intranasal formulation for Clearmind's proprietary drug candidate, 5-methoxy-2-aminoidine, possibly combined with palmitoylethanolamide, PA. Why intranasal? Because delivering psychedelics through the nose could enhance bioavailability, speed up absorption, and ultimately optimize the therapeutic effects. In simple terms, it could make these treatments work faster and more efficiently while also improving patient compliance by offering a non-invasive option. For Polyrizon, this partnership is a smart move. It expands the company's reach beyond just viral and allergen protection into the rapidly growing psychedelic medicine space, which has been gaining traction as researchers explore new ways to treat mental health and addiction disorders. If this collaboration leads to a successful intranasal formulation, Polyrizon could find itself with a valuable foothold in a sector that's attracting more and more investment. At the same time, Clear Mind Medicine is pushing forward with its own clinical trials. The company just kicked off its Phase I/IIA study on CMND 100, a treatment for alcohol use disorder, AUD, marking its transition into a clinical stage pharmaceutical company. If results from preclinical studies hold up in human trials, CMND 100 could represent a breakthrough in treating alcoholism, an area with significant unmet medical need. For investors, this partnership signals potential upside for Polyrizon. Expanding its intranasal tech into new applications could unlock fresh revenue streams, while also increasing its visibility in the broader biotech and pharmaceutical markets. It's still early days, and a lot depends on how the R&D process unfolds. But if this collaboration delivers strong results, Polyrizon could be positioning itself for a bigger role in the evolving landscape of innovative drug delivery solutions. Our review on SAIH. SAIHEAT Limited, formerly known as SAI.Tech Global, is carving out a niche in the tech space by developing advanced solutions for high-performance data centers. Their focus is on capturing and recycling the heat generated by servers, which not only makes the process more energy efficient, but also creates opportunities to use that heat for things like residential and commercial heating. It's a perfect example of green tech meeting cutting-edge performance. Their products, like HeatWit and HeatNode, are designed to support AI and Bitcoin mining operations, two massive industries that require serious computing power. This positions SAIHEAT in a growing market, offering solutions that could help these industries become more sustainable. On top of that, they're venturing into nuclear energy through their HeatNuc division, where they're working on developing small modular reactors, SMRs. If these projects succeed, they could open up entirely new growth areas, tapping into the clean energy sector. For investors, this is an intriguing opportunity. With their focus on efficiency in both tech and energy, plus the potential for breakthroughs in nuclear power, SAIHEAT could become a major player in both the tech and energy markets. It's worth watching as their plans evolve. Our review on AREC, American Resources Corporation, known for its focus on providing raw materials to the new infrastructure market, has been making some strategic moves recently that could impact its stock performance. The company specializes in extracting and processing critical resources like metallurgical carbon for steelmaking, rare earth elements, REs, for the electrification market, and recycled metals. With operations primarily based in the Central Appalachian region, American Resources plays a significant role in supplying essential materials for industries like steel production and clean energy. The big news for American Resources is its subsidiary, ReElement Technologies, which just made a major leap in refining heavy rare earth elements. ReElement has scaled up its SEG Plus, or concentrate refining, increasing its capacity by 50 times from lab scale to demonstration scale production. This is a major milestone as it's now positioned to meet the growing demand for ultra-pure heavy rare earth oxides, like dysprosium and terbium, which are crucial for making high-performance permanent magnets used in everything from electric vehicles to defense technologies. This move is significant because it places American resources in direct competition with the global monopolies in the rare earth supply chain. With the addition of a new 400,000 square foot facility in Indiana, the company is ramping up its ability to refine and process these critical minerals at a commercial scale. For investors, this could signal a major growth opportunity, especially considering the increasing push for domestic production of rare earths to support national security and reshoring of manufacturing. As they continue to expand their refining capabilities, American resources could become a key player in reshaping the global supply chain for critical minerals, making it an exciting stock to watch in the coming months. Please subscribe, give the video a like, and watch more from our playlist. Thanks!